Bulls are pulling more traction in the bond market as investors are taking advantage of high yields on the 2026, 2029 and 2037 papers. Now, for the Treasury Bills Market, the concentration of offers remain along the mid to long end of the curve, with trades on the March and September T-bills. Bosun Obembe, fixed income and money market trader at Axis Bank, joins me for more market updates. Thank you so much for joining us on the show today, Bosun.
Thank you for having me, David.
Now, let's start off with the 2037 paper receiving the most attention at this point in time. That's the bond with the highest excitement we're seeing for the market. Let's talk about that first, as we're doing a weekly wrap-up.
Okay, so like you mentioned, we've seen a lot of activities on the 2037 bond. At the auction of this week, the bond closed at 16%, which was quite high. So we've been seeing a lot of interest on that bond, and we've been seeing some players trying to sell that bond, willing to actually cover maybe at the next auction. So there's been a lot of activities on the bond, and on the short end of the paper we have seen interest on 2026, 2025, 2029. So the yield currently it has dropped to 15.5 and 7 respectively. So if you are an investor that has purchased this bond at the auction at 16%, so you're already making a gain on it. That's why we're seeing this activity, and the yield is quite attractive. The long we've seen yield at this high rate on 37 bonds. So, and we're still expecting more increase on the bond space due to the liquidity that we have in the money market space.
And talking about the money market space as well, we're expecting the CBN to also release the bi-weekly retail SMIS auction result as well. And as part of the forecast, you're looking at money rates to increase about marginally, really. Let's talk about that.
Okay, so for the money market, like you mentioned, the increase in the CRR from 27.5% to 32.5% actually caused a lot of illiquidity in the system. So CBN was able to mop a lot of liquidity out of the system. So we expect rate to actually continue to rise, to be at 16 to 17% level. Like today, what we on the FX space, last week CBN conducted the usual bi-weekly FX auction, so we expect the result today. Due to the illiquidity in the system last week, so we don't expect a lot of injection into the system, because most banks, they were not able to actually come to the auction with the volume they would have loved to actually come for, because of lack of liquidity.
Now, Bosun, wrapping up the conversation, what's your forecast for next week?
So for next week will be quite, we'll see some kind of improvement in system liquidity. We have more maturity of about 30 billion coming in on Tuesday, and on Wednesday we have another bond auction, Treasury Bill auction. So we have about 240 billion. At the last auction, the 1 year paper closed at 13%. This auction coming, we expect a rate to actually to move up to at least 50 to 100 basis points as well. So we expect the yield to continue to trend upward. That's just to be the forecast. And the liquidity coming from the TB maturity, it will reduce the pressure that we currently have on the money market space. And if the FAC is paid into the system too, it will help to reduce the liquidity in the system. And on Friday too, there will be another FX auction where bank will have to actually fund to go for the auction. So I expect the money market rate to be high on Friday. It will remain at 16% level next week.